It's my pleasure to be here today, and I thank you all for being here as well. I'm honored to be a part of this panel. Before we go into how Henry Schein Financial Services can help those impacted by Hurricane Sandy, I first want to tell you a little bit about Henry Schein Financial Services and myself, actually. So not only do I cover the Metro New York region of the Northeast Territory that I have, but I also cover all of New England, all of New Jersey, the rest of the state of New York, and some areas of Pennsylvania. So needless to say, over the last 3 weeks, I've heard some really sad stories and unfortunate circumstances from customers impacted by the storm. But with that being said, I've also seen a lot of resilience and the goal to persevere through these challenges, and that's quite encouraging as well. So who is Henry Schein Financial Services? Well, we are indeed a wholly owned subsidiary of Henry Schein Incorporated. We conduct business in 10 countries. We provide financing for dental, medical, and animal health care exclusively. We partner with 4 primary lending institutions who underwrite our loans for us. At HSFS, we create the pricing, we manage the relationships with our field reps and the customers, and these partners of ours actually do the underwriting of the loans. In addition to those 4 primary lending partners, we have also some affiliated partners who handle some of the niche markets like real estate financing, SBA-based financing, and even high credit risk financing as well. But first and foremost, Henry Schein Financial Services is a private industry equipment and project financing entity. In terms of what we have to offer, for equipment financing, we'll do anything between 1 and 10 years in length for terms. We offer deferral periods up to 6 months in length for repayment. We do all sorts of project financing that would include startups, relocations, renovations, office expansions, additional offices, and again, we can offer terms up to 10 years in length. One important note here is the fact that we are providing, with most of our approvals, a 40 to 60 hard-soft cost ratio requirement. And this is typically a lot more liberal than what you'll see out there by commercial banks. And what this really means is the ratio is set up, this is how we collateralize our agreements. So if you were to finance $100,000 with us, only 40% of that, or $40,000, will need to be attributed towards hard costs. Hard costs being defined as tangible goods such as medical, vet, dental equipment, cabinetry, furniture, computer systems, telephone systems, etc. The soft costs would be the construction, the leasehold improvements, access to capital through working capital loans, things that could pay off professional fees and pay for advertising and even some rent expense. In addition to that, we also offer graduated payment programs up to 2 years in length. So even on a 10-year note, you'll see this specifically with startup projects and relocation projects. They tend to take advantage of this. For the first 2 years of, say, a 10-year loan, you're not burdened with the full monthly payment right out of the gate. We have sort of a step-up payment program. So you could pay, 25% for the first 9 months. You'll have a 30-day deferral before that. The second year, you'll pay 75% of the full monthly payment. And then years 3 through 10, you'll pay the full monthly payment. I mean, a lot of our startup customers and people who are relocating that are worried about cash flow issues for the first year or 2 with this undertaking, this is a great match for their budgets and needs. We also have a lender that provides a principal buy-down feature, which gives customers the ability to make additional principal payments immediately, starting from day 1 without penalty. And we have some of the most aggressive prepayment terms in the business. And of course, in addition to equipment and project financing, we also offer practice acquisition financing as well. As it pertains to those customers who've been impacted by Hurricane Sandy, we've come up with this program called Bridge to Budget to help you bridge the gap between making some purchases now and deciding on how you're going to pay for it. It's really giving you access to equipment financing now because of the natural disaster, and you have the ability to postpone your decision on whether or not you want to finance that purchase outright or roll it into a finance agreement. Now, you'll have up to 6 months to make that decision. So while your insurance claims are being processed, you may get that money back sooner. Great. You may say, okay, I want to go ahead and pay it off in cash. What's my balance? And that's it. Or if the claims don't come back in time, you can just go ahead and roll it into a finance agreement that's tailor-fit for your budget and cash flow production of your practice. The only charge for this program is just a 1% rental, we call it a monthly rental fee during this bridge period. So whether it's 2 months, 4 months, 6 months, whatever it may be, let's use an example of $50,000. So you need to purchase $50,000 today. You're going to make a monthly payment of $500 for whatever the appropriate bridge period is for you. And if it happens to only be 2 or 3 months, great. But you have up to 6 months to utilize that bridge period before you make a decision on whether or not to purchase everything outright or roll it into financing. So why utilize Henry Schein Financial Services? You know, we are a very unique company in the way that we do business as a finance entity. We provide true 100% financing to our customers. If you're working with most conventional and commercial banks, they're typically going to require a 20% down payment. We offer fixed rates, so your payment's not going to change for the life of the loan that you sign up for. You know, there's a lot of unknowns out there right now. You look at the fiscal cliff situation, rates may change going upwards, they may not, but it's a precarious position to put yourself in when it comes to a variable rate because you don't know where you're going to end up in the next few years when it comes to your monthly payment. So that's why we certainly advertise and promote fixed rate financing. Our turnaround time, especially on equipment-only transactions, I've approved equipment-only transactions up to $250,000 in less than, well, it says here within an hour, but I've often done it in a half hour. You know, we are very quick to turn applications around. Our lending partners have these scoring programs that are top-notch, and it's really, you know, a convenience for our customers because they're quite often used to working through banks and waiting several weeks to hear back on whether or not they're going to get approved. In addition to that, we do not place any liens on anybody's personal assets. So regardless of the size of the loan, whether it's a $25,000 equipment purchase or a $500,000 relocation project, we are not going to place any liens on your home, your automobile, or your personal property. The only liens that we take, if we do equipment-only transaction, we're placing a UCC filing on that piece of equipment. That is it. That's our only right to recover in the event of a default. On a project transaction, such as startups, relocations, renovations, the ones I've already named, we'll file a blanket lien on the practice. But that only entitles us to the assets within the 4 walls of the practice, nothing outside of it. So you don't have to worry about us coming after your home, coming after your automobile, jewelry, etc. And I think that's critical when it comes to making significant purchases and financing. We also don't report our loans to the Personal Credit Bureau. And when I speak to the reps in my area, I think this is one, as I point out, is probably the most important feature, beneficial feature of our program. Because with most financing done at a commercial level, your loan is going to show up on your personal credit report as debt. Now, what does that do? It impacts your debt-to-income ratios. Subsequently, your credit score is impacted. And potentially, that could impede your ability to borrow both on the professional side as well as the personal side. So this is a very important feature because your loan with us would not show up at all on your personal credit report. The only thing that shows up is the initial inquiry to get you credit approved. And of course, as I mentioned, it's truly 100% financing. Usually with a Henry Schein equipment purchase, there's a 10% required down payment, that is, and we deposit rather, and we waive that with financing with HSFS. And of course, last but not least, you have our guarantee. This is all under the Henry Schein umbrella, and I think that means a lot as well. Last but not least, we also have a number of value-added services that we provide at Henry Schein Financial Services, and these are really great services to help you, you know, open up new income streams in your practice and help you save money on some of the things that may have eluded you in the past. For instance, we have the Henry Schein credit card, which gets you 2% cash back or reward points based on your Henry Schein purchases. We have patient financing that's ran through City Health Card, which compared to its competitors outperforms in just about every category there is. We have a credit card processing program through Monera Solutions that will save you money in those fees. We have a patient collection services. which is a really interesting value-added service that we provide because we take the burden off of you of having to collect on past due receivables and let you focus on what you do best, and that's treat your patients. And lastly, demographic site analysis reports. And this may be relevant, while we're all meeting here, because if you're potentially looking to relocate or open a second or third office or start from scratch, our demographic site analysis reports will give you statistics based on median income, population, age in that area, education, and last but not least, your competing practices. And you can hold up to 10 zip codes worth of information on each report. And that is actually all that I have, but again, I will be here all day, and I welcome any questions, anything at all that I can help you with. That's why I'm here.
What are the rates on the financing loans that you provide?
Well, the rates will vary depending on a few different factors. Number one, the term of the loan. As I mentioned before, we go anywhere between 1 and 10 years in length. It also depends on the amount financed, too. Every quarter we publish promotions that are specific to certain kinds of equipment. So, for instance, this quarter, and I'm in the dental side of the business. I know that doesn't pertain to everybody, but on 3D cone beam financing, we're at a 4.99% rate for 5 years. But the rates are going to. It's a tough question to answer just because we need to know a little bit more about each transaction. But I can tell you that we are extremely competitive with everybody else out there that's doing what we do.
Thank you.
Sure. All right. Well, thank you so much for your time.